Hello, everyone, and welcome. In this session today, we're going to be talking about the opportunities in Africa's capital ecosystem. I'm Maria Rotilu, and I am an MBA student at the Great University of Oxford Saïd Business School. And I'm also the MD of the Oxford Seed Fund, a student-led fund that invests in Oxford-affiliated ventures every year. It's my pleasure and honor to welcome you all, to welcome our esteemed guests to this critical discussion on the opportunities in the Africa's ecosystem. VC funding on the continent has tripled in the last 5 years. Over $1.4 billion was invested by VC firms into the tech ecosystem in Africa in 2020 alone. We've seen notable raises, we've seen exits. For example, Flutterwaves recently reached unicorn status, receiving $170 million in investment from leading VC funds. We've also seen exits. We've seen over 110 African startups exiting within the ecosystem in the past few years, with most notably Paystack's exit at $200 million. COVID-19 has accelerated this trend. We've continued to see and expect investment in the ecosystem. However, there are still huge gaps, but these gaps present opportunities. They present opportunities to stimulate the local ecosystem, entrepreneurial ecosystem, and also consequently stimulate the economy. This session explores Africa's evolving ecosystem, the opportunities for local funding, innovative capital structures, the ecosystem engineering that could empower a VC-enabled Africa. There's so much opportunity for investment and consequently economic growth. And today I'm joined by two amazing leaders in this space. These are people I admire and respect who bring deep expertise on capital markets. Ms. Arunma Oteh, a current University of Oxford Saïd Business School executive in residence. She brings deep experience from both a macroeconomic, regulatory policy perspective with her work as the former treasurer and vice president of the World Bank, as well as her role as the deputy general of the Security and Exchange Commission in Nigeria, as well as her being the group treasurer of the African Development Bank. She is also a member of the London Stock Exchange Advisory Group. I also have here with me today Dr. Omobola Johnson, who brings executive, private, and public sector experience deploying capital on the continent, with her work as a senior partner at TLcom, a leading venture capital fund on the continent, managing over $300 million in assets, and investing in high-growth technology-enabled businesses in Africa like uLesson, Andela, Lara Health, etc. She was also previously the Minister of Communication Technology in Nigeria and led the government's involvement in local VC funds. It is a pleasure to have you both. And Dr. Johnson, congratulations on your recent appointment as the chair of the Guinness Nigeria PLC. I guess just moving straight into it, I think I'll just kick off with Mr. Oteh. It's such a pleasure to have you. One thing that I think we're going to benefit from your discussion today is just the richness of your experience. I'd like you to just usher us into your thinking. How do you think about the role of venture capital within the continent? What are the opportunities that you see are presented to unlocking economic potential and potentially other innovative sources of financing? I'm going to leave it open for you to take us, open. Over to you, Mr. Oteh.
Thank you, Maria. And thank you to the Dean, Tammy, Jide, and all the student staff and faculty who've put in such hard work to ensure what has been an extremely successful forum so far. I'm particularly pleased, like you, Maria, that this year's forum is focusing on the topic Africa's evolving ecosystem, capital system. And of course, it's lovely that my friend and sister, Omobola, who's a great example of hard work and excellence, is also joining this conversation. For me, in response to your request, Maria, the starting point is really that Africa must have a world-class finance ecosystem and to focus on the prize, which is that we're trying to achieve inclusive growth. We're trying to address the challenges that Africa faces, and we're trying to harness all of the opportunities. And in my view, and as I've said very publicly, they abound in every country and in every sector. We should not be a wealthy continent that is home to the poorest people. And I do believe that entrepreneurs have such an important role to play in this regard. take jobs. There are 29 million young people who will join the workforce annually, and most of them will not have jobs. If we do not empower our entrepreneurs with the finance that they need, with the opportunity for them to succeed and scale their businesses and meet Africa's enormous unmet needs. Take the US, and I use the US as a metaphor because there are several other countries that we could talk about. Finance is easily available. So entrepreneurs can easily fail and therefore easily succeed. We need to create that kind of environment on the continent. So for me, there are 3 points that I'd like to focus on. One is creating a supportive operating environment. I know that everybody talks about it. We hear about it in every conference, and people say, it would be nice if we have the right infrastructure, of course, particularly digital infrastructure. I know that Omobola did a lot of work in our own country, Nigeria, in trying to move that agenda forward, ease of doing business, services, talent, R&D. And so what happens in the wider ecosystem, of course, affects innovation, it affects entrepreneurship, it affects whether money will come to our continent. And I've always said that even Kenyans don't invest in Kenya because they love Kenya. People invest where their money will be protected, where they'll get the returns that they've talked about. So let me just say something more specific about the operating environment. Just think about the macroeconomic environment. A stable macroeconomic environment where inflation is under control, where exchange rates are stable. If you don't have that, I'll give the example of many African countries today have yield curves that are inverted, meaning that investors are rewarded more for taking short-term risk than giving long-term capital. It is difficult to attract and retain patient capital if treasury bills and government securities are earning double-digit interest rates, for example. So just bear that in mind as you think about just the macroeconomic environment. The other thing I want to say is that there's a lot of local capital available, and I would say that a lot of it is idle. Because if you're just sitting back and earning your returns on T-bills, which many pension funds today are doing on the African continent, that's a problem. There's not enough data available, so we always struggle with statistics. But pension assets, I did a back of the envelope review of 9 countries outside of South Africa, $80 billion. South Africa is a $500 billion pension industry. Insurance assets, $68 billion. Sovereign wealth funds, $81 billion. So let's even just take a base. Let's take out the South African pension industry and say all this is about $200 billion. 2020, if the data is right, there was about $1.4 billion that was invested in VC. 2019 was about $2 billion. So if you take 1% of the funds available from that $200 billion, you can basically have resources from the African continent that can help early stage Series A, Series B, Series C. Yet, I think more than 40% of the funding that goes to that sector comes from North America. Yes, so there's a lot that we can do in that respect. The third point, and maybe I can pick it up since we don't have very much time, is really greater sophistication in terms of the kinds of transactions, in terms of exits, in terms of just leveraging the entire ecosystem of the banking sector, the insurance sector, and capital markets more broadly. And I can pick that up in our Q&A.
Fantastic. No, I hear what you mean. I think there's a lot of emphasis on just the structural incentives that actually, incentivize investment into the local ecosystem. It's not so much that the capital is not there. There are pools of capital to which we can create structures that allow that to be more scalable. No, thank you very much. That's really helpful. So moving on to Dr. Johnson, with your work with TLcom, one thing that I find interesting about venture capital is how deliberate it can be to stimulating impact, but then also returns are not compromised. With TLcom, you've invested in amazing ventures that have significant impact in the continent, but then also the returns, to Arunma's point of, people don't invest because they want to, they invest because the returns are attractive. Dr. Johnson, tell us, what opportunities do you see for venture capital in this conversation and investing in strategic industries that create economic, potential for the continent.
Yeah, thanks, Maria. And again, thank you very much for inviting me to speak on this platform, and lovely to see all of you again, especially Arunma, who I haven't seen in I don't know how many years now. So it's great to sort of see you. Look, the venture capital industry in Africa is one that is really exciting, and it's taken a while to get to this point where we're talking about companies that are valued at $1 billion. It's been sort of 5-6 years in the making. And so what this, the exits and the high valued rounds are doing are really showing what the upside of that opportunity is. But this is really very small when you look at, the size of the opportunity. The thing about it is that, they're really opportunity. It's very hard to say this is where the opportunity is. Africa is a continent that is really quite underserved or not served at all across almost every single sector you can think of, whether it is health or agriculture or finance or commerce. There are huge pockets of underserved and unserved consumers. And the good thing is that there are over 1 billion consumers in this continent. Yes, it is true that many of them are not wealthy. Many of them don't have discretionary income. But the thing about it is that all of them have income that has to be spent on certain things, whether it is if you're sick, you need to go to a hospital, you need to buy food, you need to send your children to school. And what the whole technology and this mobile first continent that we are, what that does is that it actually makes it easier for people who don't have the high levels of discretionary income that we see in other economies to do all of these things in a way that makes sense for them economically. So, I know there's been a lot of talk around, a lot of the narrative and the excitement has been around fintech, and, nothing wrong with that, because, fintech is solving many, many problems for many people across the continent. But I think that beyond fintech, what we need to start thinking about is really when we have all these fantastic payment systems, we can lend money safely and securely, and people understand what it means to borrow money and they will pay it back. What are they going to buy when they go online? What are they going to buy when they have all these efficient payment systems? I think that's where we really need to focus our efforts on right now. So whether it is, buying health services, buying insurance, buying a car online, which AutoCheck, one of our portfolio companies, allow us to do, whether it is logistics and making that easier for long-haul logistics both within country and outside the country. Our focus now, and it's what I used to say when I was in government, our focus now is around content. So what is the content that we're going to put online so that we can actually utilize these payment systems more? We can get more people online, get them doing more things, and in that process, actually create more wealth for not only entrepreneurs, but literally the whole ecosystem.
Fantastic.
I'll just stop there because I know that you have lots.
No, I have a follow-up question to that. No, what I hear you say is that there is opportunity. There are a lot of problems to be solved within the continent. And my follow-up question will then be, do you think there's commensurate capital to capitalize, in quotes, on those opportunities? We do see gaps in the ecosystem, especially with early stage. Those that eventually make it to unicorn starters had to have been invested in by someone who took the cornerstone risk in the early stages. People like TLcom who make early stage bets in ventures that are just getting out. How do you see the match between the availability of capital and the availability of problems to be solved?
Yeah. There is not enough capital. And I think, Arunma's made that point for sure. But what we also need to say is that there is the acceleration of capital coming into Africa is just mind-blowing. We've gone from $200 million less than in 2016 or so. 2020 was close to $2 billion. That is a 10x over 4 or 5 years. So that is amazing, but it's still not enough. And really, where are the gaps? The gaps are everywhere, to be honest. In the early stage, we're sort of growth stage. When you look, let's define what early. If you see early stage is sort of pre-revenue, you just have a minimum viable product. You need 10, 20, 30, even 100K. There's a bit of money there. But basically it's still not enough, because one of the lifeblood of venture capital is that deal flow. You just keep having companies that are coming through because you're choosing one out of every 100. So there's not enough capital. Then I think that for that to solve that particular problem, it's really around looking at domestic capital, because this is where, like Arunma was saying, this is where the domestic capital that we have can actually really help in creating more pools of capital for early stage companies. Yes, it is high risk. Many of them will fail. But if you don't get domestic capital involved in the industry at that particular point in time, nobody's going to come and do it for you. So they're the early stage funds, the angel investors, the individual high net worth individuals that really need to get on board and begin to fund these early stage companies. Where we come in is really the growth stage, and where you need to write checks of about $500,000 to $10 million. There are not that many VCs that can do that in this market, VCs that are Africa focused. We see these very big rounds, and as we see these big rounds, but many of them are not Africa focused VCs. This is like, it's an experiment for them. Oh, this looks interesting. We write a check and let's see what happens, But we need to get more focused on that. So, TLcom Capital is one of very few companies that can write, a VC firm that can write a check of $500,000 to $10 million. Now we're getting to a point where, we've been in this for about 5-6 years now. There are many companies like, Flutterwave, Kobo Logistics, Chipper Cash that are raising rounds of 50, 60, $100 million. I think Flutterwave was $170 million. We need people who can write at least a $50 million check. There is no Africa-focused VC today that can do that. We can't even do that. And so there's a gap there as well. So Maria, I guess the point I'm making is that it's very exciting what is happening right now. It is really significant, particularly because it's happening in Africa, in a place where we can solve a lot of our challenges that have been almost intractable for the last 50 years. We can use tech to solve that, but we need this capital across every single sector of the value chain, and there isn't enough. So, I'm looking forward to hearing what Arunma has to say as to how we can get these pools of capital, much more focused on Africa, and we move from $2 billion to $20 billion in the next 3 to 5 years.
Yes. Maria, do you want me to say something about that? Because, as treasurer of the World Bank, of the $200 billion that my team and I managed, $27 billion of it was pension assets. And for our pension assets, we were invested across various classes, across various geographies. So we had fund managers, about 200 fund managers, some of whom did VC. And so we were limited partners on many of those funds. And that's why I feel very strongly about really seeking ways to ensure that local pension funds can indeed do the same and deploy a bit of their capital. Because when you look at it from a risk point of view, you're deploying long-term liabilities and matching them with long-term assets. So they should really be in that space. And it's also a way to gain alpha. Some of the alpha that we got in our pension business at the World Bank was really very driven by some of these VC, PE type investments. So there's much more to do. Omobola had also talked about the importance of having some of the other players in local players. There are also foreign currency issues. So when you think about how do you deploy capital as a pension fund, you should think about ways in which you can deploy that capital locally. There are many others. If you think about, there's a family offices. I wonder what our African wealthy men and women are doing with all the money that they have. And philanthropy can even pivot to thinking about participating in some of these very juicy deals that have enormous potential in the future.
And maybe to even just double click into that point, it's coming up that there is capital within the local ecosystem that we can capitalize on, but there's also the issue of distribution. How do you think about it? There are several funds who have these pools of capital that could be gotten from innovative sources, but facilitating those capital to the ground via funds is often a gap. A few things have come. People have mentioned that there are just not enough fund managers within the ecosystem. Some say that it's just not enough deals that are viable to be venture backable. How do you think about this, and how can we approach this problem?
One idea is really just to refer back to what I shared. I had $200 billion of money that I was responsible for. $173 billion of that we managed internally. $27 billion of that we managed through various asset managers. So in a sense, we were a fund of funds. So setting in place the infrastructure that helps you target and leverage other fund managers is one way to improve the distribution. So it's a multi-layer layer approach would be what I would suggest. The other thing that happens is, and it's not just a concept in fund management, but also in banking, is a syndication. Anytime a fund manager is raising money, you know the limits for your own fund as to what you will take. So if you've got a syndicate of funders, it's also an opportunity for various fund managers to come together. So what I would like to see more happen on the African continent is many more fund managers working together, participating in a deal, because beyond the money, they also bring skills through the questions that they ask that are extremely important in making those transactions successful.
Fantastic, fantastic. Dr. Johnson, if
I could just, sure. If you don't mind, just to speak to the questions that you asked. I think, venture capital is, it's a fairly well-known asset class in Europe and the US and other developed markets. It's a fairly new asset class here in Africa. And really it is tremendously, and so you've got to go through a process of trying to convince people that this is a viable asset class for Africa. I know that with our first fund, it took us almost 2.5 years to raise $70 million. Who spends 2.5 years raising $70 million, for goodness sake? It's a rounding error in Silicon Valley. But it was trying to convince people that, technology, there's an attractive upside for technology in Africa. And people, people still think of Africa as its impact, its development, and trying to get them to understand that there's business to be done and there's money to be made. That took a long time to do. And we had, it was myself, Maurizio, these are, Maurizio's ex-McKinsey, ex-Bain, had done venture capital for 15 years. I'm ex-Accenture minister. This was us trying to raise this money. So you can imagine people, and this whole notion of first-time managers and everything, almost every single fund in Africa is going to be a first-time manager, for goodness sake, because this hasn't been done before. So it's really beginning to tell, and what's happening now is it's good narrative to really make it easier for for us to raise VC funds for Africa. But it's a tremendously difficult process to raise funds. So forums like this, and there are many, many, many that are happening where we can talk about the upside, talk about the opportunities. Yes, there is a risk, of course. There's a country risk, there's a currency risk, but these are risks that exist in other markets as well. But I think what is happening now is that it is getting easier. And as I would say that as we raise our second fund, it's a much easier process, because even though we haven't had any exits, we have had a number of rounds to prove that, this thing is going the right way. We can have great returns as good as in Silicon Valley, and the entrepreneurs here are honestly and truly just as good as anywhere in the world. So, you better bring your money here. But it's that narrative that just needs to keep happening.
No, this is fantastic. And we're getting to the point where we might have to now take audience Q&As, but I want to just, ask one final question, especially on the point of exits, which you brought up, Dr. Johnson. How do you see the ecosystem evolving? Because that is one thing, investors want. I need to know, what the returns are, great, but then also the liquidity of those exits. How do you see that evolving, over time?
I think that what's going to happen, and again, I'm going to defer to Arunma to answer this question much more authoritatively, but there are three ways in which you can exit. Well, three major ways in which you can exit a company. You can exit it through a strategic buyout. A company a big corporate in the same field will buy this company out. We saw that with Stripe and Paystack. You can exit via IPOs, and now they're SPACs, and so those are the ways in which you can actually you can exit. But I think that in this environment, with the depth of our stock exchanges and the kind of requirements, they're asking for now, it will be difficult for us to have those local exits unless the local stock exchanges start thinking through how you can make it easier for tech startups in Africa to exit on your own exchange, because that brings a lot of liquidity when you hear about the kind of valuations these companies bring. I think the other thing is that around the corporates, the third area I was going to talk about, I beg your pardon, was the private equity firms. We can exit to private equity firms. So for the IPOs, we need to get local stock exchanges to really think about how they can support these tech startups and get them to IPO, even if it's a dual IPO, both locally and on the NASDAQ or whatever it is. The second thing is around PE. It's as if the narrative I'm hearing right now is it's as if, PE hasn't worked in Africa because they haven't had the kind of returns. And it's a very sad narrative, because if we don't have more PE money coming into Africa as an exit channel for these technology startups, we're going to come to a point where this thing might stagnate. And so I'm hearing this again. I'd love to hear what Arunma thinks around, you know, the narrative around PE in Africa. There's billions of dollars poured into PE, and they're saying, oh, the returns haven't been great. But I think it's too early to make these kind of conclusions, you know. So those are the three exit options. I think all of them are viable in this market, but we need to work really, really hard. You know, just anecdotally, just final thing. When we were raising the fund, the question was around, oh, there's not enough deal flow. Oh, we can't do it because there are not enough companies. And we said, oh, there's deal flow. We looked at 300 companies in Q1 alone. Oh, but now, oh, there are no exits, you know. And so now we have to work hard on the portfolio companies that we all have as VCs to move them to the point where we can exit them successfully, either through IPOs, strategics, or PE firms.
Mr. Oteh, over to you. Feel like
I agree with Omobola completely. I would add a few thoughts. Omobola, in an earlier response, you talked about narrative. I think we need data. You know, when people are not familiar with a place, which is the problem that the continent always has, we just need data that tells the stories. The kind of momentum that we've built over the last 5 years in VC is one that is much easier and people feel more comfortable to respond to the market. What I've seen with some of the PEs is that, you know, people who had exited are regretting exiting, so they're looking to come back in various forms. But I also think that the domestic investors play a critical role. If you don't have your own investors who are leading the way, if we've got a market that's dependent of 42% of it is non-African or North America particularly, that's also a challenge. I do think that, and you know, I spent most of my career working on capital markets and regulating exchanges. I do think that the exchanges need to do much better. I think that, you know, when you see what's happened with SPACs in the US, where people are saying IPOs, the process is bureaucratic, it's difficult, so you're having people, you know, form special acquisition companies and targeting certain sectors. We should see that kind of innovation happening on our markets. I'm glad that some of the exchanges have published rules on SPACs, but people need to focus on the fact that we're trying to create an ecosystem that helps businesses, that helps money get to businesses so that we can solve all of Africa's problems and not focus on sitting back and letting those things happen. So it's IPOs, it's PE, it's you know, even the strategic sales to corporates is also something that we need to see much more of. We're not even seeing enough of it. But I would add that something that I haven't shared, Maria, is really that development financial institutions have a very crucial role to play. They understand the space. They have risk capital. They provide a lot of first loss instruments that gives everybody comfort so that they can earn their money. So leveraging them a little bit more. I mean, over the last, you know, through my 20-year career working with development banks out of my 34-year career, they were all anchor investors in VC funds or in private equity funds. But a lot of those who use them as anchor investors are non-African funds. So African funds need to learn to use the DFIs as anchor investors in their funds.
No, this is amazing. So just moving over to questions for a bit. I know that some questions have kind of come through. I will just take a few in the next few minutes as we wrap up. So I think I'm going to kick off with a few. One, I think this is for Dr. Johnson. 1 second, we're just trying to figure out the... Okay, so this is yes, this is for Dr. Johnson. It says, how to solve the structural problem relating to financing of African economies, especially since the countries of the continent will face funding constraints due to current crisis. So I think this is asking pretty much with COVID in context. It's made the already difficult path even more difficult. How do you kind of think about this from a funding perspective?
Well, you know, in a sense, you know, Arunma answered this from a funding perspective. Yeah, and I think you said it in your opening remarks. What COVID has done is actually accelerated the funding that is coming into, you know, the asset classes that we're talking about, venture capital, because we are showing that, you know, many of those VC companies have been quite resilient in the face of COVID. Many of them are helping companies to recover as people go, more online in Africa. A number of those companies have had their best years ever. The fintechs have had their best year ever, and so it's showing that there's a resilience in these tech companies. And so the way that that this finance will come in, to be honest, it's going to be through a lot of this money coming into these companies. They will have the other sort of instruments around, helping governments to get over it and everything. But when you think that in 2020 alone, Nigeria got, just shy of $1 billion into VC. That is a tremendous amount of money. We need more for sure. And I think that as we go into this year, the statistic that I've seen is that in Q1 alone, and this is across Africa, there's been $800 million of VC money coming to this continent in Q1 alone, almost more than the whole of, going and accelerating. So I think for me, that is the way. It's this money coming in to fund companies and businesses and not governments. I'm sorry to say that. That is really what should happen, because when you fund these companies, when they grow and when they scale, they do all the things that Arunma talked about. They create jobs, they create wealth, they solve massive challenges, intractable problems that we've had for many, many years, education, health, and all of those things. So for me, it almost is a no-brainer. This money needs to come into commercial.
Maria, let me just add that I think there's a great opportunity to target funds that are focused on environment, social, and governance standards. I mean, when you look at 2019 versus 2020, money going to those funds tripled. And Africa is, just an oasis for various forms of ESG targeted funds. What I was surprised at is when you see the data on just even for VCs, you would have assumed that fintech, would get most of the money. Fintech gets about 25%, clean tech gets another 22%. And so you see that funds are looking for where they can put their money and have impact. And Africa provides that opportunity. So we need to also focus on the narrative that helps us target those funds.
Fantastic. And a question for you, Arunma, that comes through, and this is on the source of the capital, right? It says whether foreign, or local, should this be the question at all? Why exactly do we want to think about the contribution of local capital to the venture space? Do we want to just, make that accessible to everyone, since it's going to give us jobs, it's going to create youth and employment allocation? How do you think about that?
Oh, it's a question that I got often asked when I was Director General of the SEC, and I always had two responses. So I'm sorry to be a cop-out. I say yes and no. Yes, because as I've been very clear about always, you must make sure that investors feel as comfortable, whether they're local or foreign investors. Investors want the same thing. They don't want risk that they haven't thought about, and they want to make money. So you create an environment where they do that. Yes, sorry, so that's, no, there's no difference. Yes, there's a difference, because charity begins at home. If you yourselves, your investors, the local investors, are not as focused as investing in the local environment, why wouldn't I get a signal that maybe it's not the place to be? So it's really both. You create a market as a regulator, as an entrepreneur, as a VC that is domestically, that is located in Africa, where people feel it's the most attractive destination. But you create an opportunity for everybody to thrive, whether they're local or international, because they bring different things. They bring different currencies, they bring different skills. You need global knowledge, but you need local knowledge as well. So yes and no.
Fantastic. Dr. Johnson, what would be your response to that question?
No, I would agree. And the point I would agree on that resonates the most with me is that charity begins at home. We can't continue to look for foreign capital when there are pools of capital here that actually can fund fund this industry. So I think I totally agree. It's a yes or no question, but I do agree that this whole notion of charity begins at home. We can't be talking up an industry and saying, oh, this is a great industry and all the capital comes from abroad. We've got to figure out a way to actually make sure that we get some of the local capital. And what I've seen happen, just very quickly in terms of innovation, is that there are now asset management companies that are raising local currency funds to actually fund some of these businesses. I think that because they take away the currency risk, which is part of the risk that we talk about if it's a local currency fund. So again, trying to attract some of that money in local currency is important. So nothing else to add, to be honest. I think Arunma said it very well.
There's one more question for you both, and it's asking about the roles of corporate organizations. What part do they play in this whole conversation? You mentioned something, Arunma, earlier about the fact that there actually could be strategic exits to corporate organizations, and someone's asking, like, what is their role in this conversation, and how can they take part enough in building the ecosystem to which they exist in?
Do you want me to start?
Yes, please.
I think that we need another hour for that conversation. No, because corporates have treasuries. They have money that they can deploy long term. They can also be mentors to smaller businesses. Whether it's Germany or in Japan, there's a whole ecosystem that drives a supply chain. So there are many ways in which they can support the growth of smaller businesses and therefore support VCs. They can also be good corporate citizens. So when I talk about ESG, some of the ESG issues, people consider it a cost, but I'm sure in the time you've spent at Saïd Business School, because Saïd focuses on some of the economic and profitable opportunities from ESG. So they can be good examples that can portray the country or the continent in a positive manner. And we see some of the companies, the multinationals, doing that across various countries.
Fantastic. And we have just 1 minute left. Dr. Johnson, final thoughts on that question before we wrap up.
Just two things. I think it's around partnerships with some of these tech VCs and also supporting the ecosystem. And banks have done that fairly well in Nigeria, where you have the accelerators, the incubators that are funded by banks. And they, it's an enlightened self-interest. They're looking at what's happening in the space, seeing how they're going to be disrupted, seeing where they should invest. So the incubators, accelerators funded by the banks, but also corporate partnerships with these tech startups. I think that's very, very important. That's the way they can play a role.
This has been amazing. This is a great conversation. Thank you so much, Mr. Oteh and Ms. Omobola. It was amazing to have you. Thank you to everyone who listened, asked questions. We really do appreciate it. And yes, have a lovely day.
Thank you. Thank you very much. Nice to see you all. Bye-bye.
Thank you for such a great session, Maria.
Yes, it was great. Yeah.
And Omobola, what a joy.
See.